Hello, my name's Brad Teal, and this is our December 2016 market wrap. The 12-month period of time has seen a buoyancy that we've just continued layer upon layer, year after year. We seem to talk about buoyancy. The peak of the market, though, for Melbourne prices was September 2015, where the annual growth was 14.2%. Up until October 31, they're the most recent RP Data CoreLogic facts and figures, and we thank RP Data CoreLogic for all of their information over the year. But at that October 31 date, it shows that 9.1 was the annualised growth of the Melbourne market. Now what we see is that the property market is broadly tipped to continued growth over the next foreseeable future, and it's based on low interest rates. It's based on low stock levels. It's based on a declining days on market, so homes are selling much faster. And the investment returns are increasing, and that's predicated mainly on capital growth contributing a bigger proportion of investment returns, not just rental yield. So we see the combined capital growth and rental yield analysis provide that Melbourne is 12.5% annualised and Sydney is 14.2%. We look at rental yields, and rental yields are very flat across Melbourne and the lowest on record, and that is 2.9% annualised yield on average across all investment types. We look at the growth, the population growth, as well as low interest rates and low stock levels. Population growth is one of the big drivers of the market in Melbourne, and in Victoria, 114,000 people moved into Victoria, the highest amount of immigration and interstate transfer since 2009. That's 2,200 people each week moving into Victoria and essentially into Melbourne. So that is one of the major drivers of population growth, needing place to rent, place to buy, and so many greenfield subdivisions out there at Werribee and Pakenham and Cranbourne and up at Wallen and out at Doreen. All of these subdivisions are being pushed along by this massive immigration of 114,000 people, and no sign of waning, by the way. So that's a really important thing to consider, what is fueling the marketplace. Now, when you look at the property market, what drives it? We've talked interest rates and immigration, but one of the major drivers is low stock availability. Melbourne has seen a 21.4% decline, nearly 25% is a quarter of all sales decline. Year on year, that is by far the biggest drop in any capital city. And that is meaning there is less for sale. And so there are more buyers with increased immigration, compressed into fewer homes for sale, keeping prices higher, and there is a dramatically declining days on market. So homes are selling quicker, loans are cheaper, more people wanting less stock. That's your formula for increasing popularity and higher prices. Now, as a kid, I remember growing up and we used to talk about hundreds and thousands. And you'd go to a kid's party and there'd be little triangular shaped bits of bread with hundreds of thousands. Then later on, we talked about millions and billions. Now we talk about trillions. And you will note that there is huge amount of value of property around Australia. And what we see is $6.7 trillion in the total value of residential real estate, $2.1 trillion of value of all of our superannuation funds combined, $1.7 trillion of value of listed equities on the share market, and 0.9, not quite 1 trillion, but nearly $1 trillion of value of commercial real estate combined around Australia. So the phrase this year is $1 trillion, not billions. So we've talked a lot about 2016. Now, where are we going forward into 2017? What's going to happen? Well, low interest rates, in Australia at least, look like prevailing, although the US have put their rates up by 0.25%. We have low stock levels. We talked about increasing immigration to take up that reduced amount of stock, so that keeps upward pressure on pricing. There's a big demand for take up of the apartments that everybody predicts over time will be an oversupply, but there seems to be immigration coming in to take those rental apartments up. What's going to happen in America with Donald Trump? We don't know. What's going to happen in England and Europe with Brexit? We don't know, but they are the political influences can change things around the world, but on face value, we're in a pretty good place. So we look forward to some positivity in the market again over 2017. We have planned at Brad Teal Real Estate for that continued sustainable, strong property market. We look forward to your continued support, and on behalf of all of my staff, wish you and your families a very happy and safe Christmas and January holiday period. Thank you.